Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto, and as always,
Dan Hussey is here with you, everyone.
Dan Hussey in the house. Today, we're going to cover some stuff. Summertime doldrums, but still dog days. We're knocking on the door of the dog days here, but still stuff is moving in the grain and livestock markets, especially we're going to take a look today. Before we get started, a couple things we want to let you know that if you're interested in hearing about grain market movement and strategies daily, you can sign up for our Ag Hedge hotline hosted by expert market strategist Ted Seifert. Gets on about 2 o'clock Central Standard Time, I think, every day. Totally free. Gives you a chance to connect with us personally if you have any specific questions about the markets or ag commodities in general. If you're interested in learning more about how this price action works and how to make it work for you, this is a great way to connect with us. Perfect first step. Link is in the description below to sign up for that. Totally free, zero commitment, and you just cannot beat being able to hear from Ted on a daily basis like that. He's very thorough, and it is a very generous offer, seeing as the price is zero. Dan, we went without you, I might add. I hope that you're healing well. How's your foot?
My foot's good. I'm now in a walking boot, so that's awesome. I can't believe it. 2 weeks after the surgery, I'm already technically walking. We're not putting major weight on it. I'm not doing marathons yet. I'll be in this boot for another few weeks yet, but wild that I opted for the surgery, and it is a lot quicker recovery than I thought. So we're doing good.
I knew you would be back at it.
I need to get the updates, though, on what were people saying and thinking and talking about down at the ag conference this last week. I wasn't, unfortunately, got to be privy to those conversations, but I know some things had to have been said. We always like to talk about what was that general tone at the conference. How were people feeling? What were they saying?
General tone, Agri Next, put on by Susan Stroud and No Bull Ag, well-attended conference in St. Louis, was rather toasty and slightly humid there right next to the Mississippi River. We had a chance to visit with customers and industry folks alike, some producers, some financial folks, some end users, folks from the trading community, a pretty good cross section, Dan, of people that we would want to say hello to. And the feeling, I think, was the same feeling that we have here every day, is that South America, pretty big crop. The U.S. on the verge of pretty big crop. Some folks from Brazil spoke to talk a little bit about their process and the things that they go through down there, which was interesting to me.
Were the folks from Brazil affiliated with anyone in particular?
I can't remember. You got me stumped on that one, but I think that they were involved in production in Brazil.
Okay, cool. Yeah, I was curious if it was like an FC Stone or what layer of the industry they might have been speaking to.
That's a good question. I'll have to go back and double check that. But there were some folks from the press down there. Big announcement from ex-Reuters commentator Karen Braun.
Can you believe it? What happened with her, huh?
She got a new job. I'm not sure where she went, but I bet it's going to be great. She announced right on stage that she was joining us here at Zaner Ag Hedge. A lot of folks
pretty excited to have her officially on our team.
It seems that way. And a lot of folks were excited about that immediate response. She almost didn't get it out, almost didn't finish speaking before folks were signing up for her newsletter. And I'm sure that we're going to be making it very easy. I saw an ex post from her today, making it very easy to get involved with her new Zaner Ag Hedge venture, which is that newsletter. I don't know about you. You know what? I do know about you. And I think that you'll say the same thing. Is a lot of days I don't know what I think until I see what she posts. And
absolutely.
So I've only been doing this since 1992. I'm starting to get the hang of it, but certainly she helps me understand what is going on at a depth and with a scope that is very difficult to get to for most folks.
Yeah.
So I'm grateful to have access to that. And I think that many of the people that view this and many of the folks that we speak to and try to speak to would certainly benefit from signing up for that newsletter.
absolutely. And we know we'll be happy to have her on as a guest at some point in time. And that newsletter will be available to everybody. I think it's available right away, but if it's not, it will be coming out very shortly. I'm ecstatic to have that much at our fingertips, folks. If you guys don't know her, she's absolutely data driven. Everything Karen talks about is of the moment and of the most importance for the market right now. So check it out. We're excited to have here with Zaner Ag Hedge, and can't believe that we're moving forward in so many different directions right now. It's too cool.
Not to oversell this conference, this No Bull AgriNext conference that we attended. This was the second time, I think, officially that we have been in attendance. And same way that I felt last year. You and I were there last year, and it's the same feeling I got this year as I did last year, that I'm just lucky to be able to be standing next to, in one moment, I'm having a conversation with folks from Minnesota who grow and trade in large amounts of corn, for example. The next moment, I'm having a conversation with a very, very knowledgeable banker and finance person from Ohio. You turn the corner and now you're bumping into somebody who trades as a CTA. It was a wonderful cross-section and just a lot of, I think I learned more about, I was speaking to a banker that also raises cattle. And I came away from that conversation. I think I just accidentally learned more about raising cattle maybe than I knew before I came to the conversation. It was it was just a pretty neat deal to be able to speak with people and have that kind of sincere and thoughtful dialogue in that environment. And so the dialogue that we had was in a karaoke bar where the levels might have been like 8.5 or 9. You could barely speak, and it was late at night, but just wonderful access to people that you wouldn't normally get. So I highly recommend, if folks are on the fence about attending that, or maybe following up and listening to some of the presentations on YouTube, or double checking with the No Bull folks. It was a neat deal. It really was. You're
That's
going
awesome.
next year, right? You'll be healed by.
Oh, absolutely. Yeah. And right. The only reason I had to miss it this year is because I, of course, stepped on my own foot and broke it, literally, folks. Right. And what can you do? It's been a wild couple of weeks for me, but I'm glad to hear the conference was awesome. It sounds like the tone there was probably pretty good, but those instances where you get to bring everybody in the industry together, right? It's invaluable what you can gain and talk about. So market wise this week, seems like it went out with a little bit of a dud here on a Friday. I know in the row crops, I think there's a lot to be said about that cattle sell-off and the $1 million question of, is there a top, right? But you really got to ask yourself, Joe, what's changed? So where do you want to hit it off? Where do we start with next?
You're setting the tone for this cattle, and we might as well jump right into that. So you look at what happened in October live cattle. You open the week at 224.70, high 230.42.5. Low trade 222.47.5. That's important. Last trade 223.67.5. Down only 0.52.5, less than 1 full point to be down for the full week. And why do we say only? Because your high was 230.42 and you closed it at 223 and change, back above the 10-day moving average. But yesterday, and when I say yesterday, that was Thursday, July 31st, that price action, rather brutal, downside correction. You get lulled with this cattle market because you haven't had really much of a down day in weeks and weeks, all the way back into June. And yesterday they take the opportunity to take what I thought was about 675 off of that cattle price. So the discussion yesterday was, okay, well, here it is. Is this the top? This is certainly the correction that many folks had been fearful of. Some analysts had been asking customers, had been asking viewers and listeners, really, you want to make sure that you're up to date and you've got your hedges in place. And lo and behold, giant move lower. However, open interest did not change much in live cattle, I don't think, yesterday, which is very interesting. Huge move at the end of the month and roughly no change in open interest. And so that begs the question, well, what really happened there? And then today, we follow up today, and I don't have the numbers in front of me, but I think that's folks can easily check. Cash cattle trade here today was higher. And so cash market, at least for now, not turning. Box beef has been trending lower, products, right? Trending lower. And that also begs the discussion, is the consumer growing weary? That change in box beef and product could be a function of the increase in meat imports from countries trying to get ahead of tariffs. We're probably seeing a lot of meat come across from Mexico. Mexico, big importer into the United States. We get a lot of meat from Mexico, right? So
Mhm.
more questions than answers. However, I would say that big price move, not surprising, back above the 10-day moving average, and strong cash cattle trade here today, not giving signals at this moment in time of top.
No, no. And I would tend to agree with you there. The way we didn't follow through in the end into the end of the week after what was amounted to be like it was the width of yesterday's move is the equivalent of a limit move, right? I mean, it
Yeah.
wasn't limit because we weren't down that much, but we weren't off that much off the highs, right? And the point being is like that's enough of a move that usually would halt a market. And we didn't see any follow through here today, right? And that's not a great sign for the top caller. If anything, it looks like, right, we just unwound some of that maybe euphoric buying that and the last blow off of the blow off top or the parabolic move there. But like you said, we're still above all those major moving averages. That 18-day moving average is still below us and untouched. And I was kind of expecting a test of that level 22.21 or 221.5 there in that October cattle, and we didn't get it. Maybe you get something on Monday, but unless you break and you're holding below that, that's one of our key indicators for continuation of an uptrend. And sometimes we come down and we test it and we get back above it. That's kind of all this has been. We flipped on the daily from overbought now to oversold in just 2 days' time. Unless that sticks, this could be the most selling pressure the market can take or give us in this moment of time. And if that's it, somebody's in here with two hands keeping us supported. Of course, this is the part of the conversation where we have to say you start to go below these lows. And now you're unwinding everything we're talking about. And that can get a little more bearish. Some support probably come back down around that 55 and 50-day moving average around the 213 area. 100 days way below is down at 207 and the 200-day way down there at 197. So lots of levels on the way down to go on test if that's what this market wants to do. But as of today, we put a halt to yesterday's selling. And like you said, cash market's higher. What's changed, folks? Why would this market top now?
So
I don't. It's tough to build that narrative, right?
Let's talk about that. In that this is the cattle market, and as we have seen in the recent past, we would all be fooling ourselves if we were to remain lulled into some sort of false sense of security.
Absolutely.
Higher cash cattle trade, we understand that. Lack of actual animals coming along, no open border for Mexico. All of those fundamentals, I would say, are known. They're impactful, right? We can't write off these known fundamentals like we would oftentimes and say a known fundamental is a useless fundamental. These are very important. It's math, right? If the animals are not out there, you can't slaughter them. If you can't slaughter them, you can't put them on the market. It's just these are fundamental facts that people should be aware of. However,
Right.
This is the cattle market, and if they want to take it from where it is now to much, much lower, and 2 weeks later we look back and say, geez, we were not expecting that. You must expect that because this is cattle. And if the funds decide to take a big chunk of this open interest out or move to the sidelines for whatever reason, and the algos want to go with them, none of these fundamental facts can stop them. Certainly they can arrest any downward movement after time, however long that takes, whether it's 2 days or 2 weeks or 2 months. Certainly the fundamentals must ultimately reemerge and take precedence again. But in that time, the distance they can travel. And yesterday, I think, was a stark reminder, right? Yesterday, we can look at that in two ways. One, you had the patient buyer that was waiting down there. They finally met some market weakness and were able to get involved the way they had been waiting to get involved. The other thing is that this market does have some air in it, and you can lop off big chunks of value in a matter of days. And so everybody, whether you're bullish or bearish, whether you're currently underwater or whether you're currently well ahead, everybody that's participating in this market should rightfully be nervous, right?
Mm-hmm.
There's no comfortable
Right.
spot here.
100%.
There just isn't.
No, there really isn't.
So you and I we talk about education from time to time, and we want to do our best to inform folks. We mentioned overbought and oversold. Tell me, and I don't know that we got to get out the Investopedia, but if we say, okay, cattle's overbought, how do we give me a very basic idea of how we measure that?
Absolutely. So there's kind of two major ways of measuring that. The first is from a literal read of the Commitment to Traders report, right? Seeing that there's a massive position in the speculative categories that is long in the markets. That's an overbought market from a speculative standpoint. And that's a way of looking at participation too. Another way of looking at overbought is in momentum indicators like RSI or others here. We've got, let me reshare that screen real quick. We've got the RSI on our chart right here. But, technically, and the technical reading of being overbought is when we push above about 80, that 80% threshold, because you can't go past 100 is the idea, right? You can't have 100% buyers or 101% buyers. So you pass this threshold of that the market has just had as much buying as it possibly could have. And then what happens at some point, you run out of buyers and all you're left with is sellers. And so the market sells off. And you can see how it's correlating with just about every market peak is a pop in the RSI up towards the overbought category. And likewise, flip that idea, invert it. Oversold is the other idea. When you get below that 20% threshold in the RSI, the market is considered oversold and markets run out of sellers and then return to a series of buying. Like you said, Joe, algorithms and other things pick up on this and they end up turning the market in a way that creates price discovery. You trend from periods of overbought to oversold and back to overbought and then back to oversold. And we can measure those cycles with RSI and with the commitment to traders reports.
And that's perfect explanation. We do our best to try and kill as much jargon as we can, right? We don't want to be speaking the language. And for some of our three viewers, maybe that the description of overbought and oversold, an oversimplification for them. But for some of us, and even especially for folks like me who have to be taught things over and over, very nice entry point or refresher to the concept, because you see talk of overbought and oversold all the time. And sometimes you think, well, those
and
folks
what does that mean, right? What
exactly does that mean?
What are you telling me, right?
Yeah.
Because like I said, there's kind of two ways of looking at it. And I'll be honest, we looked at RSI. Some people might look at other momentum indicators for the same purpose. But generally speaking, when we talk about it, RSI is probably one of the biggest used, and the others is the literal participation from the speculative interests in the market and that commitment to traders report.
Another fine example, I think, up until yesterday of overbought, September feeders, high was 341.05, low trade 329.75, last trade 333.92.5, down 172 there. Not a lot of open interest in feeder cattle, and it actually went up on yesterday's move. But there again, we have a market that has been kind of bouncing above, bouncing up and down in that range, right?
Right, it was
overbought range.
Right, overbought range, and it just kind of we were grinding higher, and we got lulled to sleep. Had a little bit of that parabolic move at the end, which quickly got reversed, and we got too many buyers. We got too optimistic. And actually, to comment real quickly on the idea that I'm not surprised open interest went up a little bit on the feeders. The reason being is because they have kind of lagged the facts, in my opinion, in this run up in this rally and in the market in general, because I think they're just at prices where people get very skittish. But I do think we're now at prices where you're seeing actual producers come in and say, crap, I will sell some. I'll take a futures position up here. This is like the highest price I've ever seen. So you are starting to see guys that are utilizing the board for doing some sales and trying to get some future sales done, because these are just eye-popping prices, right? And I get it. I get why that hedger might increase our open interest at this time, trying to participate now at the best prices he's seen in his entire life.
Other side of that coin, too, I think bears mentioning is that what appears to have happened is that you had some sort of initial fund or algo type news headline type sell-off. And as we got down to the lower ranges of yesterday's price action, your buyers were rather willing. And so all of that selling interest was met by buying interest, by some buying interest and more, which to me, again, doesn't speak to a top. We will see a lot of smart folks. I thought I saw David Hightower today say it very plainly. I'd like to wait and see a day or two to see how this shakes out. We won't know until we see it, right? That's for sure.
Right.
How about
That's
corn?
absolutely right.
Corn opened the week 419 in December, corn high 419 3/4, low 408 3/4. Last trade 410 3/4, down 8.5. Kind of an interesting 8.5. Funds short about 196,000 contracts.
Wow.
Export sales, Dan, I'm sure you saw Karen post that today. That export sales number 1,892,000 metric tons, well above the 600 to 1,600 range they were anticipating in new crop corn. So here's my question. We're all bared up in corn, right? We can't turn a corner, but boy, this demand still seems to be cruising along.
Yeah, that's where I feel like corn has maybe it's going to have the hardest time staying down, right? I think in this environment, I think there's a big reason why we're still have a four handle in front of December corn right now. And it's that demand, that surprise demand that we've had all year. Corn just, it's been resilient. And I can understand why there's demand out there. Think of all the uses for corn right now and the profitability at these prices. Like, I'm surprised we're going down at all from the demand ideology behind corn. But then, of course, the sobering reality of the supply side comes in with the massive crops out of South America and the United States that we're seeing in just back-to-back years. Globally, we're in a bumper crop for corn, but demand is taking it in stride. And I feel like that's why we've kind of some to some extent, I feel like there's some equilibrium being found in corn right now, which is cool to think because we're
Sure.
and unfortunately, I do feel prices will take a dive below $3, right? But I don't think we will stay there for that long. At least I'm optimistic we won't. And the demand we've seen from this year, I don't think it's possible for it. Once we get the reality of harvest supplies dumping on this market, through that, again, you're just left with all you have until next year, and demand is there eating up that pile. So I'm pretty optimistic about the support we've seen holding the corn, but I'm not naive enough to think we won't take that dive down below 4 and really test if we should be above 4 or not.
And said, a thought came into my mind while you were laying that all out, in that it's going to be very instructive, and you hate to kick this down the road a month or two, but going to be very instructive to see how the market works through the fact that I think that there isn't a lot of corn out there right now. If you went out and said, hey, I'd like to buy some corn, you might have to work pretty hard. And I think basis is going to show that, right? And then you start talking about, okay, when does this U.S. crop become available? What were the challenges to South American exports? They have this giant crop, but can they get it out to the world? And so it's going to be interesting. And I think basis will lead the way, will point the way, and then we'll see what this U.S. crop is really made of. Karen also this morning mentioned 2020, where you had right about now where folks unanimous in thinking about big numbers coming into harvest. And then the final crop number was much, much lower than folks were thinking about. It was a bit of a derecho in there that had an impact, right? But maybe no derecho this year. But interesting to compare the sentiment from then to now, because it would seem to me that bearish, almost unanimously bearish out there, wouldn't you say?
Yeah, it really is. And at some point, right, like just what we were talking about in the cattle market, cure for high prices is high prices. Well, guess what? You want to instigate demand and cure low prices? Go seek out where that demand is. And that's exactly what we're seeing now. Cattle markets, you'd expect the top with overwhelming irrational exuberance. Well, row crops, we're going to expect the bottom with peak pessimism. And a lot of guys thinking that the bear is here to stay. And I wonder if we're not getting close to that because of that unanimous idea that corn, that we should be heading lower.
Soybeans, an example of not quite holding the way corn has held. We opened the week at 10.15 3/4 in November beans. High was 10.18 1/4, low 9.86. Last trade 9.89 1/4, down 31 3/4 on the week. Funds are short, roughly 32,000. We talked about oversold. Looks to me like we're would you consider that oversold?
Oh, yes, definitely oversold in the daily RSI. I wouldn't consider it, I'd consider it oversold in a sense that too, right? Look at this wedge of the range we've been in. Just the price range that we've been trading in for the entire year. We're down towards the low end of that range, right? Oversold RSI. We would want to look into the commitment of traders too to confirm that, like, you'd see that bigger fund short, or we have swung from a net long position to the kind of that net short position down here now. All those things would go and play into it. But yeah, we're oversold in the short term. And that might be a reason why we're taking a little bit of a pause for that selling pressure here today.
From a money flow perspective, they have a lot of bullets. If they're only short 32,000 contracts, they could
oh my gosh, that's nothing, right?
Come after that. Funds have not shown much of a propensity to have a large short bean trade here for a little while. I didn't really prepare to talk about that, but it dawns on me.
Yeah, that's an interesting idea that we'd probably have to put some thought behind, right? Because is it a China thing? Is it the idea that right, biofuel thing? Do they know
Yeah.
something's coming down the pipeline? Are prices just too cheap, right, in their models for corn and beans to be short these products? Because, right, if you're a hedge fund, you're probably out there modeling what the value of this commodity is around the world, looking at different supply and demand, blah, 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 and spitting out a number. Is there value down here? Is that why they're not short, right? Because, hey, beans don't tend to stay below $10 for very long. And we do seem to get these moves back above it. And is there a reason they aren't committing to that?
Let's
The question in the back of your mind.
let's talk about let's have a rather impolite discussion here. If you closed your eyes or if you covered up the November bean part of that chart and you just looked at that chart, it doesn't take much imagination to see that a dollar lower, does it?
No, it doesn't. I mean,
technically that looks rather
speaking,
suspect.
it really does. And I would just tell you, there's two measurements I would look at here. Well, definitely not using a circle.
Oh, that's okay. I'm with you. So what you're trying to draw on this chart right now in real time is you're trying to draw some retracement level and say, then we're going to extrapolate how far potentially this thing could
That's
go.
exactly right. I'm just going to do it with a rectangle here to show you
Sure.
what I'm measuring, the distances I'm measuring and I care about. There's two of them. One is the initial swing into this range, and then the other is like the distance of this range. And both of those levels basically extended on below the bottom. At the bottom for that breakout idea is like how far down technically we can think this market to go. And this is just using what is referred to as an equal legs or a box-like philosophy to the market where, hey, if you just spent your time in a dollar wide range, there's a good chance that the move up or down out of this range is going to be for a dollar. And so that's where we're projecting out here. And I'm not saying we're going down to 820 or 870, but it's a distinct technical possibility from how this range can break down or we can move out of it.
Because we've got a lot of technical fact here along this chart.
That's right.
You've got some higher lows, which is the upward sloping trend line of this wedge pattern. And then you've got some lower highs where the market had tried to retrace all the way back up and was rejected every time and brings us back down to the bottom of this wedge shaped pattern.
Mm-hmm.
And when you get to the bottom of this pattern, there's two ways that can resolve, right? You can find support here and march back up in kind of the trading a fair range like trade that we've been in, or you could say, hey, we're at the bottom of this range and there's a reason, and you have to watch for price action falling out of the bottom of that wedge shaped formation. And then that's when you bring your measurements to play, or you bring your measurements to bear, and those measurements probably roughly a buck, right?
Right. That's right.
Yeah.
That's right. And there's a lot of factors there that could keep you from going to that dollar. But, and of course, there's other measurements here that are a little shallower than that too. But we wanted to at least paint the picture for, hey, what does the bear see here? What is he thinking? And how bad could it get from a technical perspective? We wouldn't be doing our jobs if we weren't mentioning that. I will leave it with this, I guess, is that this type of wedge-like structure or triangle that we've been in for the last year, it can be very terminal, which means the burst down out of this could be one of those capitulating moments that then you see retrace all the way back towards this 1050 to 1080 level. That's going to take time. And it's going to take, this is a daily chart we're looking at. We're talking months that it would take to do that type of move. So not a here and now trading idea, but the bigger picture here suggests a move lower. And that's what Joe and I really want everybody to understand, is that there is a line in the sand here that we're on today that any lower, and we're starting to paint a technical picture that could draw the market a dollar lower. And that's not something we are hopeful for, but
Strictly technical,
preparing
right?
ourselves,
We're talking,
right? Yeah.
We're talking technically. It wouldn't matter
Pure
if this was
technical.
soybeans.
There's
or
definitely reasons
Chinese
why
silk cocoons.
fundamentally, right, we wouldn't think it was going there. But from
Yeah.
a technical standpoint, absolutely.
Another fine example of that is the September wheat market. We opened the wheat market this week at 536.5. The high was 540. Low trade 516 and a quarter. Last trade 516 and three quarters, down 21 and a quarter on the week. Funds are short 61,000 contracts of Chicago wheat. Have been, I think, in a short position covering trend for a while, but could be coming into a period here with this price weakness where you could begin to see that position, that fund short position, begin to accelerate with further downside potential.
Yeah, you really could. You're starting to hunt, I feel like, towards that $5 handle. It's a psychological level. It's also where this downward sloping trend line that is kind of the lower bounds of what would be, really a larger channel that wheat has been in for a long time here and has been capped by that 200-day moving average as resistance, by the way. So like out until we're above that 200-day moving average, just from this daily chart alone, I feel like you're in a downtrend for wheat. Don't even think about being a swing trade positional buyer for a long time until you're out above that level. But I digress. The downside here is also we are losing a little bit of momentum. I do want to point that out. You've seen volume kind of trail off in this selling pressure, right? The volume isn't as big as some of our last downside pushes that we've seen over the last year, which just leads you to believe that we're just getting towards the tail end of the move. That doesn't mean it can't head right 16, 20, 30 cents lower here in the market. We are definitely oversold in the RSI, but Joe, if you have it off the cuff, what are we looking at in terms of fund short and the wheat? Are we even that short?
61,000 in Chicago
Yeah,
wheat. And
they can get short. They can get shorter there, yeah.
One thing that I wanted to mention that you and I always talk about is that we are always, for lack of a better word, suspicious of
yes, we are the ultimate cynics.
Yeah, we're a little suspicious about moves that don't travel along with volume. So you have a declining market, but you also have declining volume, which means you're starting to certainly lose momentum. You're beginning to lose commitment. You just don't quite have the participation on this downside move. And sometimes those lower moves in declining volume market, when the volume does pick up, it moves in the opposite direction. And so what I wonder here is if we're not getting to a place where we could find some support for whatever reason. I can't speak to what that could be at this moment, but you get down here and then next thing you know, you're 80 cents higher. And so I would caution that maybe this trend is getting a little, there may be some opportunity to look at this from a different direction shortly. I don't know. It's hard for me to put it
It's hard to pick a bottom. We're not bottom pickers, right? That's not what we're here to do.
We don't want to be grabbing the knife while it's still falling, right? But once it hits the ground and that declining volume says you're close to the ground,
that's absolutely
there may be
right.
an opportunity to pick it up here by the handle once it stops falling.
That's right. And then there seems to be a narrative here, right, of like being prepared for potential turnarounds, but not necessarily hopping in and diving into these markets. And we're trying to make people aware that things have run their course for a bit here.
This wheat chart brings us to the close of our programming today. If you can take us out.
Yeah, absolutely. Thank you for listening to the Zaner MarketCast. If you need more because you just can't get enough of us, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. If you have a question you'd like to answer on the show, there's a link for you to do in the description to do just that. Just follow along on the instructions there and comment and follow the podcast to not miss a beat. And we'll be back with you all as price action develops. Have a great weekend, everyone.
Good weekend, everybody.